Hey everyone, Evan Kaufman here. Welcome to the VA Loan Crash Course, where we like to say it's everything you're going to learn, or just about everything you're going to learn about the VA loan in 15 minutes or less. We're going to give just a brief second here for folks who will log on that might have registered again from some of the other platforms. Again, my name's Evan Kaufman. Help build We Vet Home Loans. We Vet Home Loans focus on VA loan originations. We like to say we help military families find and finance their next move. I was active duty myself years ago and just really enjoy helping military families move all around the country. And we've built ourselves to really help that demographic, our active duty military families, moving. If you're a veteran too, we'll gladly help you as well. And know that if you're a vet, that everything you help us do, or if you're working with us, goes to also help support active duty families, as that's about 70% of our business. Now, let's get into the VA Loan Crash Course and almost all you need to know in that 15 minutes. So right up front, we're going to go over our course objectives. We're going to talk on the VA loan history and some major highlights about the VA loan. Then we're going to look at some common questions. These are the questions that in the past might have been different than what they are today, and we're going to hit them in rapid fire order. Then we'll talk about what we call VA Loan 101, the major terms about the VA loan that you should understand if you're considering using it. Then we'll round it out with a scenario example of VA versus conventional, talk about who qualifies, and then lastly, just touch on how you can go out and win a home with a VA loan. So first, looking at the loan history and the highlights for the VA loan. Now the deal is it's a product of World War II. So at the end of World War II, think of it this way, there are literally millions of service members that need to be reintegrated back into the economy. So Congress passed something called the Service Member Relief Act of 1944. And it created a bunch of programs to help those members reintegrate back into the economy. The two big programs that still remain today is the GI Bill, if you're familiar with that, for educational benefits, and the VA Home Loan Guarantee. Now here's the thing. The VA Home Loan Guarantee is called the guarantee for a reason. And this is where we're going to go right up front and cover one of the big myths about a VA loan. The VA does not actually fund VA loans. If you notice, the name is guarantee. Kind of think of it almost like an insurance policy. What the VA loan is, it's actually the VA, the Veteran Affairs are saying, hey, lenders, if for some reason a veteran defaults on a loan and they've met their minimum criteria, we're effectively going to guarantee that loan up to 25%. Now, yeah, there's some more math to that for smaller loan balances but in general, you can think, hey, around 25% of the loan is ultimately guaranteed by the VA, hence home loan guarantee. So that means that lenders are really funding the loan. So as we'll talk about throughout this whole discussion, every VA loan is treated slightly different by every lender because they're the ones technically lending their money, so they're evaluating the risk on their own. Something for you to keep in mind. Just because you're denied one place doesn't mean you'll necessarily be denied somewhere else, vice versa. So know it's like an insurance policy, 25%, and the VA doesn't actually fund the loan. Now, what does that though guarantee allow lenders to do ultimately? Three major things. Number one, it allows for 100% financing. If you want to, you can put 0% down on a VA loan. Secondly, there's no private mortgage insurance. That's that monthly penalty for if you put less than 20% down. And then lastly, because there's lower risk, there's a 25% guarantee by the VA. That's better than a 5% down payment. It's 25% guarantee. That should mean more competitive rates. Now, we should asterisk that one, I think, here in the future for it, so I always point out, it depends on your lender there, though, definitely. Some lenders charge the same or even more for VA loans. But if a company is built to handle VA loans, that interest rate should be significantly more competitive, anywhere from a quarter to over a full percentage point more competitive than a conventional loan, and we'll touch on that some here when we do the comparison. All right. Next, we're going to go over the common questions that we get hit with. And these are going to be in rapid fire yes/no answers. And the reason being is because remember, the VA loan now is celebrating its 80th birthday. That's an idea. Guys, we need to do a post that says 80th birthday or something like that. Man, that's like grandparents there for that sake. 80 years old, the VA loan. Pretty incredible. So the reason why we have these Q&As is because in the past, that means that the loan has changed dramatically over those 80 years. In the past, some of these answers might have been different. So that's why we hit on each one, because we're asked them relatively regularly, especially by folks who may have dealt with the VA loan 3, 4, 10 years ago. So first, can I use a VA loan more than once? Yes, you certainly can, which usually follows on to, can I have multiple active VA loans? Yes, you certainly can. We help a lot of folks who we're helping them get their third and even fourth active VA loan, meaning they own other homes that have VA loans to it. Next, does a VA loan benefit expire? No, it does not expire. Does a VA loan have a size limit? Big change back in 2020, just a few years ago. No, there is no size limit. Does a service-connected disability affect your VA home loan? Yes, it certainly does, and we'll talk on that here in a minute. Next, can I use my VA loan while on active duty? The answer to that is yes. And sometimes we get that question because it's VA, veterans. I'm active duty, perfectly fine. Active duty is our focus, right? That's 70% of our business. Another 20's veteran, and then about 10% for regular civilians. So definitely can be used for active duty. Can National Guard or Reserve service members use a VA loan? Yes, they can. In most instances, it works out just fine. So here's a recap of some of those questions and a couple others. Feel free to take a photo of that. We also have this slide, really this whole video I've shot probably 20 times. So we got plenty of it on our website, or you can on YouTube. So I say, hey, if you're finding some value right now, subscribe to the channel, really helps us out. We just started this. These are a lot of the videos that we've done that I've personally done for commissioning sources, for basic training groups. We're now putting them in a digital format, and at weavet.com here over the next couple months, you're gonna see that change and become even better too, where it's just a good depository for all these videos. But here's a recap of some of those questions. Now, let's talk VA Loan 101. These are the big key terms. There's a few more, which if you're interested, we have a VA Loan Masterclass. It's a little longer, like 30, 40 minutes, that I hit on some more VA Loan 101, but we're gonna hit on the core ones right now. So first, VA mandatory funding fee. This is a one-time charge, charged at closing directly from the VA at the time of closing. And we'll show you a chart here in a second of how much that is, but it's always at closing. Doesn't matter who your lender is, it's gonna be the same no matter what, because it's a charge from the VA, and it can be paid by three different ways. Paid by the buyer at close, the seller at close, or what typically folks default to is rolling it into the loan. Now, how much is that mandatory funding fee? Here it is. Here's a breakout of that chart. It really depends on your down payment, if it's your first use of the VA loan, and if you have any VA disability compensation. Because think of it this way, right up top, we say, remember that VA disability compensation has an impact? If you have 10% or greater VA disability compensation, which the VA estimates is over half of all veterans, then there's no funding fee. Gone, disappeared. From experience, we see that with most veterans. Typically active duty though are having to deal with the funding fee unless they have that Purple Heart or one of those weird scenarios where they got off active duty, came back, or their reserve and they got their ratings. But typically active duty are gonna have to deal with this. So here's that breakdown. You're gonna notice real quickly, hey, for your first use of VA that doesn't penalize you so much, or I should say charge you as much, it's 2.15% if you're putting 0% down. But this is where we're unique, and we say, hey, putting money down on a VA loan is actually not a bad idea, especially if you're subject to the funding fee. Why? Because if you can put at least 5% down, the VA drops that funding fee to 1.5%. And good news is that just came down this last year, so that's a plus. And it may come down again in the future, knock on computer hardware, this wood table. Hopefully it's coming down again in the future for us too. But the deal is, if you put that 5%, they drop it to 1.5. Now, if you look at what's called a subsequent use, if you're wondering what the heck is that, we should probably put like parentheses, 2+ uses. That just means any use after your first. So it doesn't matter if you have active VA loans or not. If you just already used your VA loan at least once, you now, when you go to use it again, fall in the subsequent use category. So notice that the VA says, hey, if you're using this VA loan again and you're doing 0% down, that funding fee is a little higher. It's 3.3%. But put 5% down, and they drop it to the same 1.5 that it was on first use. So as I always like to tell folks, especially younger soldiers, airmen, Marines and stuff that we're working for, sailors, can't forget sailors, space, golly, I'll forget it. I was Air Force myself, the new space one, space cadets. That's not quite it, but love working for our Space Force too. Anyways, if you're at that point and you can get to that 5% down, it makes a big difference cutting that funding fee. So as I always say, hey, if you can't get it your first use, the VA doesn't, it's not as big of a benefit to putting money down. However, for that second, third, fourth plus use of the VA loan, that's what you want to do. And the unique thing with us is we'd love to see all of our clients have a paid for, near paid for home by the time they get out of the military. And really the only way to ultimately achieve that is to focus on trying to make sure you can lower that VA funding fee or eliminate it altogether. That's an essential thing. So there's a VA funding fee. Next step, certificate of eligibility. This is important, the most important document for the eligibility of a VA loan. So think of it this way. There's certificate of eligibility, which is, hey, can you do the VA loan? And then there's just overall qualification. And qualifying means, hey, that you ultimately have the debt to income, all that kind of stuff, credit to qualify. Lender typically qualifies, VA deals with eligibility. So in order to even get to qualifying, hence why it's the most important to get to qualifying, is that you got to have the eligibility to use a VA loan. And the certificate of eligibility, otherwise called the COE, is directly from the VA. It's a one-page sheet, sometimes 2 pages, that breaks out all your information related to your eligibility. So the biggest thing up front to think of is that if you're being told by a lender that, hey, you got to go pull this or get this yourself, or please send me your COE, that should be a red flag. I'd love to be working for you because I do VA loans all day. But if not, you should just know your lender should be able to pull that for you, because those of us that work a lot with the VA should have direct access to pull that COE for you. You should also not be charged for that. It should be a free thing. We've seen that done before, and you should not be paying to get your COE. If you have any issues on that, please feel free to ask. And the key is have that pulled at pre-approval. Before you're even going out and looking at homes, you want to know what your COE is. Last thing you want, and folks can run into it, is you're under contract, you're 4 days before closing, they pull the COE and there's an issue on it and the deal blows up. Seen it done before. It's important to check that beforehand, because if there's not a clear COE, there's no VA loan. All right, VA property types, something to be aware of. Think of it this way. The green column is all primary residence. That's the essential part of a VA loan. You plan on living at the property. So single family homes, good. Condos, we put it on here because in the past that wasn't always the case. Most condos are in good shape now. Townhomes, multi-unit properties, mobile manufactured homes, and new construction. Sometimes people get told, oh, new construction can't be done. That's one of those lender things. And you gotta, if you're gonna buy land, you have to do the build immediately with it, called the one-time construction close. We work with those. You can watch another video that we have on that called How to Buy Land. I think it's like one of our most watched videos on our YouTube channel. If you look at that, it sounds real great, but I think it's like 5,000 or 6,000 views. But go ahead and click on it. You can watch that and get a good idea of it. Now, not eligible properties, think of it as you're not living there. Commercial property, raw land, undeveloped lots, or investment properties. But now there's a reason why investment homes is on the same line as that green multi-units. So another deal we're actually about to do right after this presentation is a discussion on how to invest while in the military. And one of the great ways of doing that, and I've dealt with personally and a lot of clients, is that you can ultimately purchase a home and then rent it out if you PCS or move to a new location. But you can also buy a duplex, triplex, quad, because those are considered single family homes for the purposes of mortgages, and you can rent out the other units. As long as you're living in one, you can rent out the others. Very powerful with purchasing multifamilies with a VA loan. Now let's compare quickly. This is an example of a conventional versus a VA loan. This is pulled from late last year, early this year. So the rates are a little bit better on here than what they are, just to say that. So no disclaimer, rates have changed or whatnot. But it's actually not wildly crazy because rates just dropped a bit yesterday, which is a big plus for us. But here's the example that we had. $500,000 home, 30-year mortgage. You can see where the VA loan, it didn't have that full percentage difference, but 0.875, big savings on the rate. Able to put 0% on the VA loan, 5% on the conventional. And in this case, even though the loan balance is higher on the VA loan, you'll see that monthly payment is lower because that interest rate is just a lot less. On top of that, the conventional loan has that private mortgage, the PMI, private mortgage insurance penalty of $114 a month. So how do we evaluate that? Well, we took it all and combined it up for a 10-year period. We can make it look really good and say 30 years, but we know that's not necessarily reality. The average move time frame is like 7 to 10 or whatnot. I know a lot of our guys hold stuff for investment, so we just did the 10-year. And the whole point there is your mortgage insurance savings, your additional interest savings, and that down payment savings you didn't have to do amounts to around $86,000 difference in cost savings on a VA loan versus a conventional. Now, we did this presentations for some financial advisors. I used to say we did this for them, a few weeks ago. Now it's been a few months ago, and now we've done a lot for them. But they pointed out too, take that money and invest it, and you're well over $100,000 over that 10-year period. I'm more in the camp of, I guess you might have just bought a new car or something. You at least got 86 grand to go do that. Point is, it's pretty big savings difference. Could be anywhere from 86,000 plus to over 100. So that just shows some of that power. Now, this VA loan example is with the exemption on the VA funding fee. So if you had that, that would skew the number a little bit. It'd drop it down probably into that, the two and a quarter, just depends on what VA funding fee you're paying and stuff. That could drop that by about anywhere from, $8,000 to $12,000 or so or whatnot. But still a big savings on that VA versus conventional. Now, let's talk about who qualifies. Remember, the VA loan is a guarantee, not funded by the VA. So the VA tells us as lenders, hey, you got to still evaluate the risk of that borrower. So since every lender evaluates risk differently, that means there's effectively 1,000 different types of VA loans because every lender treats things slightly different. For example, credit rating. What credit score do you need to get a VA loan? Depends on the lender. VA is actually pretty silent on that. Doesn't really matter so much to them your credit score. A couple other items do, but your score doesn't really matter. But for lenders, they'll usually put that, oh, hey, I didn't get approved. Why? Because I didn't have at least a 680. Well, that's usually a lender deal. Like we'll work with 580 plus. We usually see most success with 620 plus. But the deal is, it just depends. Same with how they calculate income. That can be huge, especially are they calculating your tax-free government income properly? VA disability, BAH, BAS, those kinds of things. Depends on the lender if they're calculating things properly or not. So, who qualifies? It depends a little bit on who you're working with, which when we go to talking about how to win a home with a VA loan, we round it out with telling you that means you need to work with a lender who gets it. That's honestly the best way to win a home with a VA loan. You work with a lender who gets it, and then I would say right behind that, a real estate agent that gets it. That really helps as well, because sometimes there's agents out there that just think the VA loan is not a good loan product because they know the VA loan of the past 10, 15 years ago. Remember, it's changed dramatically. The changes over the last 5 years have just made the VA loan immensely more beneficial than it was in the past. Very worthwhile loan product to use. So, rounding this out, my name's Evan Kaufman again. I like to say you're a VA loan originator. I hope that you got some value out of this and really hope they get the chance to working for you in the future. Please feel free to reach out to me. My number's on the screen. You can send an email to loans@weavat.com or evan@weavat.com. Love the chance if you're already in the process and need a secondary review. Happy to do that. If you're prepping up for everything, feel free to reach out. But if it's not me, I still wish you the best. Thank you so much for the opportunity, and any questions, drop them in the comments and we'll get those answered.